The U.S. economy is growing, but inflation just spiked to its highest level in nearly 2 years. What's behind this sudden change, and how will it affect your wallet? In 2026, the United States remains the world's largest economy with a GDP exceeding $29 trillion. Despite elevated interest rates, the economy grew at a steady 2.1%. This growth reflects strong economic resilience even after the Federal Reserve's efforts to balance inflation control with avoiding recession. According to IMF and World Bank data, the U.S. continues to lead globally, followed by China at over $19 trillion, and India now surpassing Japan as the fourth largest economy. The U.S. inflation rate jumped sharply from 2.4% in February to 3.3% in March 2026, marking the highest inflation level since May 2024. This rise was primarily driven by tariffs put in place after Liberation Day last year, pushing prices higher across many sectors. Daily inflation, nowcasts, from the Federal Reserve Bank of Cleveland show this shift in both the PCE and Consumer Price Index. Energy prices contributed to inflation initially, but are expected to ease due to increased domestic oil production and the end of supply disruptions. 1 year after the introduction of Liberation Day tariffs, their impact on inflation is clear. Tariffs increased the cost of imported goods, which businesses passed on to consumers. This tariff-driven inflation is a key factor in the recent inflation spike to 3.3%. While tariffs aim to protect domestic industries, they have also added upward pressure on prices, complicating the Federal Reserve's effort to keep inflation in check without slowing growth too much. Even with recent inflation fluctuations, the U.S. economy shows resilience thanks to increased oil production. Higher domestic energy output helps buffer the economy from global energy price shocks. The cessation of previous supply disruptions means energy prices should recede, easing inflationary pressures in the coming months. This dynamic plays a crucial role in stabilizing the economy despite tariff-induced inflation elsewhere. In 2026, the U.S. tops the list of the 50 largest economies by nominal GDP, with a $29 trillion economy. China follows with $19 trillion. Notably, India jumped ahead of Japan to become the world's fourth largest economy. These shifts highlight changing global economic power balances. The U.S. maintains its leadership despite tariff-related inflation challenges, showing its strong economic fundamentals and adaptability amid global uncertainties. What this means for you is clear. Inflation may push up prices on everyday goods, but the U.S. economy's growth and energy resilience could help keep your job and investments stable. Stay informed as policy and tariffs evolve, and subscribe for the latest updates on how these changes impact your finances and future.